Right, well, g'day there, everybody. Thanks a lot for joining me in this weekend market update. I just wanted to give you, of course, an overview of what we're looking at and what we have looked at as at yesterday during that pro analysis class. These markets are sitting rather precariously at the moment. We have spoken about that of a reversal process under construction. That is still firmly my belief, and it's really looking to sort of play out over the next 1 to 2 weeks. It hasn't been an overnight type of reversal process. It has taken a little bit longer. But even as at the price action that we saw on Friday with that original gap up, we have developed that of shooting star candlesticks, which is really adding to this potential exhaustion type of move over here, which is taking us all the way back to the 18th of January. So again, as we look at these markets, and if I flip on out into a weekly chart, you can see on the Dow Jones that we closed up 30 points. The S&P was actually negative, in fact, down almost 6 points. But if you look at the weekly candlesticks, they are starting to develop into that of hangman reversal candles. You can see right here on the NASDAQ, and also if I flip back into the S&P 500, and also on top of that, it is showing up at this line in the sand, or at least a very critical area of past support, turning into new resistance. This is the first time really since the rally which began the day after Christmas where we're actually due for that pullback. Now the pullback, when it does set up, we are looking for it to come on back down. Who knows, maybe down to 2,500. What we shouldn't see is to see the markets collectively take out the swing lows which have been priced in the month of December. There is going to be, again, a little bit of panic, a little bit of fear when this does play out. But the real position advantage at the moment, if you understand the market technically speaking, is the opportunity to position yourself most likely in the month of February to take advantage of the impending continuation to the upside. Now, as it stands, again, the sentiment out there in the marketplace is rather calm. It is rather relaxed to how it was really towards the back end of December. The fear has really left the market. There are people starting to flow back in. We have seen a pretty decent rally off from the December lows, and that is all well and good. I do believe that this is a legitimate move. However, again, just looking at the price action really over the past 1 week, it's really looking as though this process, although it hasn't played out yet, it is potentially going to play out this upcoming week, if not the following week. Now, in our top 12 individual trade list, the majority of our stocks, I think a firm 6 at the moment, are set to report really Monday through Friday. So that is going to add to the volatility. Just take a look at our top 12 stocks over here. They are some major sort of individual companies, and we are expecting a bit of that volatility to do with earnings to flow into some of the market movements. But be prepared. I'm warning you right now, be prepared for the markets to pull on back down. It seems as though the market is not going to do such a thing, and it is somewhat hard to believe because it simply hasn't played out yet. But when you look at some of these indicators, whether or not you're paying attention to the longer term simple moving averages, you can see price action is coming up relatively close to the sideways moving 100 and 200 in and of itself. That is not technically speaking a sell signal. However, it is that of a sort of a magnet resistance point. We are starting to consolidate above the exponential moving averages, really lulling a lot of traders into a false sense of security at the moment. If you see a long day dark Morobozu candlestick set up at some point this week, you will see price action cut below all 3 of these exponential moving averages, and then a lot of people will then begin to say, well, this is a continuation back down to the lows, which is going to be somewhat correct. However, not expecting the markets to come all the way back down and retest that primary bullish macro trend line that we have retested on the Dow Jones, the S&P 500, the Russell 2000, and also the industrial average. What is most concerning, most likely, not most likely, but most sort of prominently at the moment, is not only the back test which is going on across a bunch of markets at the moment for the first time, but also these oscillators that are extremely overbought. Pay attention to the Stokes. You can see, technically speaking, we got across last week. We started to see the pullback begin, but really on Friday with the market popping, it has somewhat negated, or at least we haven't seen these oscillators truly, or at least the stochastics, push out of overbought territory. That most likely will happen this week along with the RSI. If we do get a little bit of false break again above that of the 18th high, this is going to set up some short-term divergence on the RSI. And also the MACD, if you pay attention to the histogram, it is starting to plateau very slightly, in fact, turning down. So we've got the signals, or at least the warning signals, are here on the chart. Again, it hasn't translated into price action at the moment, but this is a process. These things generally take a couple of sessions, if not a couple of weeks to play out. Very rarely do you see just complete reversals off from critical areas of resistance. And I would encourage you at the moment, again, leading into earnings, and for us, a very busy week of earnings, I would encourage you not to speculate on positions or on the market actually taking out sustainably in the sort of immediate future these little swing highs that we've printed on these past 2 Fridays. But in fact, be prepared for the pullback, but be ready to act at the same time once we start to see those white candlesticks down and around critical past areas of support, which are going to set up that foundation for that first consecutive high low and the continuation, most importantly, of from this macro primary bullish trend line. When you see this, This is going to be the best opportunity to jump into, say, SPY positions, whether or not you want to trade the Qs or even the diamonds as well. They're going to be great plays on the long side, all right, to take out or at least to come on back up and retest these all-time highs, ultimately taking out the all-time highs in the year 2019, but also a bunch of individual trades. Now, these trades at the moment, they're not ready yet. However, they are continuing to develop. So if we see at least a couple of these stocks relatively unchanged after their earnings report, there is going to be a bullish bias once we do navigate this market pullback, which again, just to surmise, in my opinion, is going to be another buying opportunity to position yourself over the coming months, who knows, maybe even next quarter or two, to take advantage of just sort of buy and hold derivative contracts, calls on the upside, which are going to pay you off over the coming weeks and months as well. All right, so that is the overview of the market. If you want more information, have a look into that pro analysis class. You can click in the link below. Other than that, everybody have an enjoyable weekend. It is James signing off on behalf of Pivot Point Trading. All the best. Farewell.